Good evening, ladies and gentlemen. Thank you for making the time to attend the first BCS Fintech event for 2021. My name is Chikezi Ekenyel. I'm the Industry Liaison Officer and Inclusion Officer for the BCS Fintech Group. I'm really excited about our topic of discussion for today and hearing from our guest speaker, Ezechi Britton, who we've lined up. I'll be starting off with a brief summary of the open banking survey findings, followed by a fireside chat between David Lewis and Ezechi Britton. There will be a Q&A session after the fireside chat discussion. So please feel free to enter your questions, which will be answered during the Q&A. Open banking has evolved as one of the sources of innovation in financial services. With the COVID pandemic, there has been an acceleration in the digital transformation in financial services. According to the Ernst & Young Global Fintech Adoption Index of 2019, 46% of fintech adopters are willing to share their bank data with other organizations in exchange for better offers, while 89% of SME adopters are willing to share their data with fintech companies. Open banking is playing its part in this trend, amongst others, with its potential to revolutionize financial services by enabling the development of innovative financial products for consumers and businesses. According to Open Banking Limited, open banking was created to ensure transparency, innovation, and competition in financial services. Last summer, the BCS Fintech asked to partake in an open banking survey for the first time. We asked our members to share their perception about open banking because we believe sharing your responses will be essential as we continue to enhance our offerings to you, serve you, and the wider BCS community in general. The Open Banking Online survey used a set of structured questions that were completed by our members over a 2-week period last summer. Our analysis, which identified values and beliefs about open banking, contributed greatly to the crafting of relevant questions for this survey. This slide shows the open banking survey results. As you can see, we received 59 responses, which took 6 minutes 45 seconds to complete. Our surveys are quite short and insightful, so please do make the time to fill the next one when it comes around. The questions we asked included who our members thought will be the most successful service provider for open banking, what technical or legal issues our members believe the industry will need to overcome in order for open banking to fulfill its full potential. If our members have heard of these public bodies, the public bodies are Open Banking Limited, the Financial Conduct Authority, the FCA's Register, the Open Banking Directorate, and the Competition and Markets Authority. We also asked our members what they thought the target market for open banking would be. We also wanted to know how long it will be before open banking becomes the norm in the UK. And we asked our members what they thought about open banking, whether they thought open banking will lead to more significant innovation for financial products. We also wanted to find from our members whether they thought open banking will contribute or accelerate the move to a cashless society. And finally, how far will our members trust any company to take control of the contracts they have with their key suppliers, such as utilities, insurance, and communication, to ensure they're getting the best value for money? Now, here's a summary of key findings. Our survey shows that majority of our members think open banking will lead to more significant innovation for financial products, with 7% having no opinion. We suggest that our members believe open banking will lead to greater innovation in financial services. Most of our members are aware of the public bodies associated with open banking, with the Financial Conduct Authority recognized by 52% of our members, followed by the Competition and Markets Authority by 42% of our members, which suggests a high level of recognition for these public bodies associated with open banking. 58% of our members believe that open banking will contribute to the acceleration of the move to a cashless society, but this will take approximately 6 to 10 years to become the norm, according to 48% of our members. Our members highlighted their expectations of the main target market for open banking, which shows a majority in agreement that it targets everyone, with 42% expressing the view that startups and/or challenger banks will be the most successful service provided, followed by traditional banks, according to 27% of our members. With all the optimism about open banking, there is still work to be done to realize its full potential. More than 50% of our members do not want to hand over full control of the contracts they have with their key suppliers, even if they were going to get the best value for money. API security is seen to be the biggest technical or legal challenge by 31% of our members, followed by API standardization, according to 29% of our members. We are excited to share this insight from this survey, and this will be the basis for our main event today. I will now hand you over to David Lewis, who is a committee member and the treasurer of the Central London branch. He will be engaged in a fireside chat with Ezechi Britton. Ezechi is our guest speaker, and he's a founding member, principal and CTO of Impact X Capital Partners, a venture capital firm. He's also the former co-founder of Neyber, a multi-award winning fintech firm. Please feel free to raise your questions for Q&A in the Zoom Q&A chat function while the fireside chat is ongoing, and this will be answered at the end of the discussion. So I'll hand you over to them now.
Thank you very much, Chikezi. Really good presentation, very clearly done, and quite a good introduction for our conversation. In fact, unfortunately, one of the great things of this is we'll probably end up repeating some of those points and expanding upon them with Ezechi this evening. Ezechi, great to meet you. I run a banking consultancy called PMI Consult Limited, have done for the last 26 years. And of course, open banking for us, we saw an opportunity because anything new in the business, you're always looking for an angle. How do I turn this into a commercial opportunity to advise, to provide some expertise? For you, I mean, this came about, what, 2018 with the PSD2 regulations coming into force, and then the open banking forums being created around that, and then trying to find some standards. How do you really see us defining open banking the way that it's developing now? What do you think is the way forward? And again, give us a little bit of your own background about that.
Yeah, so thanks for the introduction, David, and also thank you to Chikezi for the fantastic intro earlier. Some really fascinating statistics there, really important. I think before we talk about your specific question, it'd be great just to differentiate between what PSD2 and open banking is. And I think this is a really important part. So a lot of people confuse them. So PSD2 is the... I'm sure, as I said, I'm sure everyone does. So PSD2, Payment Services Directive by the EU. And what it does, it in essence mandates that transactional accounting information and access to payment rails from financial institutions is opened up to those who want access to it, right? Given the right permission, but fundamentally, that's what it's all about. Open banking, you have open banking with a lowercase o and b, and open banking with an uppercase o and b. When we're talking about lowercase o and b, open banking, really it's more of a concept, a bit like open finance or open data, right?
Being the Conservative Party, I can be conservative with a small c or with a big C. Is that the difference?
Absolutely. You don't need to share that with us, David. You know, okay. We can still be friends after this conversation. but No, so open banking, lowercase, is really more of a concept. It's about what do we do in order to provide more access to information. Right. Open banking with an uppercase O, uppercase B is actually a mandated framework by the government, which is you will provide, in actual fact, I think it was the 9 top banks were mandated that they must provide access to account information and their payment rails in a standardized way, right? And that's the most important thing. And one of the things we'll touch on, we talk about EU versus the UK, but one of the key things is that for initiatives like open banking to be effective and to be innovative, the playing field must be level. And that means everyone must be able to gain access to that information in the same way. So whichever bank you are, you must provide that data in a standardized format.
Okay, that's quite clear. And of course, at the time, 2018, we were all members of the EU, and we all thought this is really coming partly from an EU initiative, or is it more global than that?
So PSD2 was really kicked off by the EU, right? Yeah. As is a lot of what we're seeing in the space. It's similar to the GDPR regulations as well. But like with most of the space, it impacts everyone globally, because if you're working with EU-based institutions or EU natives, it's a problem, it's a space that you have to be able to deal with. So no one can ignore it.
I mean, if I was a banker with my nice big institution and I have all this data on the customers, am I going to feel a bit protective towards it? I mean, do you think the banks were very excited about this? Or were they more frightened of it?
So really, that's a tough one to answer, and I can't really speak for the banks, but I can say that what we saw was a reluctance, right,
yeah.
from a number of the banking organizations to really get involved in the space. And exactly as you said, you can understand why. Partly it's because of, these are our crown jewels, this data, we don't want to give access to other people. Another part, though, is technology constraints, legacy systems, and trying to build out APIs around this stuff isn't easy. I spent 10 years in the investment banking space myself. I was at both Lehman Brothers and Credit Suisse, working globally. I worked in the UK, I worked in the US briefly, had some time in Japan, and spent 5 years in Switzerland. So I can tell you now, it's not a straightforward thing for a bank to provide access to either its payment rails or transactions from a global standpoint. However,
I was going to say, Jason, was it from the very beginning, it was always envisaged that it would be achieved by APIs, that an automatic program interface. Is that what an API is?
Absolutely, absolutely. So what an API is just a mechanism through which other computers can easily access your systems and request or push data. We've had APIs for a very long time. Really, when we're talking about open banking APIs, we're talking about requests that can be made over the internet, ultimately.
I mean, from my own business point of view, I remember Finastra, which is quite a large software provider for the banking space, getting very excited about the fact that they were going to provide a platform rather than a core banking solution. And this was a platform which you could bolt your APIs into. So if you're a fintech, you could piggyback. And of course, for Finastra, it meant they didn't have to develop the software. They could simply bolt on other people's products using the APIs into their own core banking solutions. So,
right, and that's we've seen Plaid do something very, very similar to that, right?
And of course, that's what's happened really in a way, is that a lot of commercialization and a lot of commercial players have come into space. I'd like to come back to that perhaps a little bit later. But when you think about open banking, do you see it immediately as a driver for innovation within financial services? Or was it likely to be something that would be very slow to adopt? Did you think that there would be a jump start? And has there been?
Well, I think it's a major driver towards innovation, because innovation happens when when the barrier to entry is lowered.
Yeah.
Right. Fundamentally, yeah, and we've seen this over and over. And the biggest barrier to entry in getting into in innovating within the financial system was access to data, access to payment rails, and that's been a major challenge. Right. It's a massive moat that is almost impossible for most organizations to breach. And there have been ways that we try to get around it. Before open banking, you had what was known as screen scraping, right? Whereby I would gain access to your banking information by you giving me permission to access it, right? And what you would do is you would, in essence, mirror my screen and watch programmatically as I keyed in my username and password, and would utilize that information to be able to pull my transaction data down. And that was how things started, right? So we've had some form of this approach for a long, long time, but it's painful, it's slow, it's insecure. The FCA hated it, for example. So once we had something like API-driven access made more available, that has automatically started to create a more innovative layer, right? Now, a great example of how we've seen this cause significant drivers for change in the past is Amazon. I think I touched on this when we had a chat about this before.
Indeed, yes.
So someone's struggling to hear us. I think either myself or you, David. So I'll certainly speak up a little bit. But David, probably it's best if you start shouting a little bit as we're speaking.
Yeah, okay. You're right. Maybe I'm not being quite vociferous enough. I need to get the message across a bit clearer. Sorry, beg your pardon.
That's all right. That's all right. So one of the amazing things about Amazon is this was a company that primarily started off selling books, right?
Yeah.
And as they grew and became more of a marketplace, selling more and more products, like all large global corporations, there was a need to move data around the business. And one of the things that Jeff Bezos did was mandate that going forwards, no data is to be transferred from one organization to another unless it's via an API. So Jeff Bezos, in essence, initiated an open banking or an open data initiative within his own organization. And that transformed Amazon, because all of a sudden, different groups within the company were able to access transaction data, client history, customer history information, returns data, stock inventory information, utilization, even from a technology perspective, massive server farms, server utilization, electricity usage. All of this data suddenly became available to anyone within the organization that wanted it. And we know what the outcome of this has been. Jeff Bezos is now one of the richest people on the planet, right? So,
not necessarily the happiest man on the planet.
Not necessarily the happiest. I'm not about to say that money brings you happiness, but you know what? Innovation has been a key driver of that. And actually that access to data has been one of the biggest drivers of that innovation within Amazon as an ecosystem. I mean, I genuinely believe that the open banking initiative is driving the same thing within the financial services space. And what we're starting to see, we touched on, the legacy banks versus the challengers, is we're starting to see now the more and more payment aggregators, services that sit on top that allow individuals, consumers to gain more control, more access to their finances are starting to come online. Where things have been a bit slower has been on the payment side of things, right? We've seen a lot of innovation around the access to transactional information. We're still yet to see quite the same innovation around access to payment infrastructure through the open banking system.
Okay, it's clear. I mean, that was really going to move us quite neatly on to my next question, really, which was, do we see this, where are the benefits going to come from open banking? And are people, are there some negatives here? Because we all worry about having our data out there. We spend a lot of time trying to protect our data so that it doesn't get out there. And yet, here's the financial services, probably the one most sensitive areas of our lives in many ways, telling us to share our data as openly as we can. So how do you see the cost-benefit equation falling? Are consumers the beneficiaries, or are banks the beneficiaries, or are fintechs the beneficiaries? Which one is it?
Yeah, and I think this is a challenge for the banks as well, because I think often they don't see themselves as the beneficiaries. They see themselves as opening up their crown jewels and giving access to everybody else, right? Yeah. In the same way that BT were highly reluctant to follow on with local loop unbundling in order to provide great access to broadband. However, if you go back 10, 15 years ago, when BT were the primary provider of internet telephony services in the UK versus today, I think no consumer is likely to say, I'd rather go back to the good old days of BT in charge of everything. At least I know I certainly wouldn't.
No.
And I think what we're starting to see is a similar explosion of services and innovative ones, particularly for consumers. So largely where we've seen the main benefits to open banking has been through ability to, KYC, so know your customer, anti-money laundering, being able to improve underwriting accuracy and speed for customers, greater understanding of your own money, your own financial situation by being able to see multiple bank accounts in one location. So Money Box, Money Dashboard, great examples of this, right? And now what you're starting to see is more of a B2B aspect. So open banking starting to become more of an infrastructure play with the likes of Finestra and Plaid starting to provide access to banking services and systems through APIs to the end, well, not to the end users, but to the service providers themselves, right? And this is something where you start to look at fintech as a service, financial services as a service. But as you say, there are potential drawbacks, right? And one of the big concerns is security.
Yeah.
How secure is my data? Well, for a start, PSD2, the open banking frameworks mandate that this information is only available to those on a request basis. So another organization can't request my data. I have to request my data. And a lot of this is passed through. So it's not about I provide a username and password to a third party. They provide my username and password to Barclays, and then they get access to my information, right? It's all about leveraging tokenization, secure access to be able to access that information. But there is a challenge here, which is what happens to those third parties and how do they store that information? And this is where we still need to have firm regulators in place. There needs to be secured controls in place. We need to be thinking about how these services providers are managed from a, simple things like penetration testing. How do they implement GDPR regulations, for example? So the thing is that to actually qualify as a provider under the Open Banking Initiative, you have to be regulated. Yeah, so I can't just go and create a company tomorrow and say I'm an open banking provider. I still need to be regulated. I still need to go through all the hoops. I need to, dot the I's, cross the T's in order to provide that service. But we still have to acknowledge that there is a risk. Of course there is. As soon as that data is made available to other organizations, it adds a risk. It's a weakness in the chain.
Yeah, I mean, I think we're talking a lot about trust and who are the trusted providers. And you're right, of course, licensing is one element of trust, that you feel there's a regulator granting licenses to the players in the space. There are some concerns about monopolies, of course, and there was the recent Visa Plaid merger was eventually abandoned because the competition authorities got involved and scared everybody away. And I agree with you. What I'm seeing happening in the space is that more and more API providers, people who are providing effectively the mechanics of how to get this open banking working, are themselves commercialization. There's a lot of commercialization around that space, where rather than every single fintech having to build their own APIs, they're buying into a company that's already developed those APIs, and that becomes a shared cost, of course. So developers, you don't have to duplicate the development effort for each bank. I had an approach only today from a company called Nextsoft in the States, which boasts having 100 APIs already in place, and with American banks mainly. But of course, that is again really the Plaid model, which came out of really an accounting product. So a bit bizarre. Where did that come from? That they were a first mover. They saw the opportunity and they moved, which is great. So trust is going to be a problem for us. And I suppose, who are these trusted providers? Are they just the banks? Is it the fintechs? Are they the ones who are going to trust in the future?
I think everyone in this space has to become a trusted provider. That's the reality of it. And it may be that the FCA starts to put in controls, only so many of these players can be out there. But I think it's more likely to be a license-based approach, and then it will be an exception-based approach with checks and balances thrown in the same way that we have credit providers, we have lenders, we have banking systems, we have authorized brokers, we have all sorts within that ecosystem. And that every one of these companies has access to a certain amount of information. I think the most important point that you touched on, though, is the risk of monopolies within the space. Because if you look at Plaid as an example, they're a really interesting business in what they do. And some of the audience might not be quite clear how an API provider actually operates, right? So what an API provider will do is they take a lot of the heavy lifting out of integrating with a financial services provider's backend for you. So Plaid will go and they'll create APIs and they'll integrate to a Barclays, they'll integrate with a Lloyd's, Monzo, Metro, Santander, etc., etc., etc. And they will do all of that work. And then you, as an end supplier, as an end service provider, will utilize their system and their APIs to provide data back into your ecosystem. But what it now means is I don't need to go and figure out how to interact with 20 banks. I just interact with Plaid and they've already done the work for me. And now I have access to the open banking system, right? Yeah, and what I can then do is I authorize my users, but my users authorize me to pull their data. That authorization is pushed through a Plaid into the bank. That information is pulled back, and through a widget or some JSON code, some JavaScript code, or whatever paradigm I happen to be using, whatever language I happen to be using, that information then appears within my app or my websites, however that might be. Okay. Yeah. So that's how you would work. And then typically you're charged on a transaction basis, volume basis, number of API calls, amount of data that flows, et cetera, et cetera. So that's how the various players start to make money. But what it really enables for, and this is really important, is firstly, it stops replication of effort at the API level. So instead of everyone trying to build their own APIs, you have a few companies that do it. But then it allows organizations to actually provide value-added services, right? And focus on what they're good at. So it's the same way that we don't all go and build water pipes and electricity systems, right? We just plug into the grid and we've got electricity and we focus on offering our service, right? Yeah. So this is what we're going to start. This is what we are seeing in that space. But exactly as you touched on, the big risk is that a Plaid then becomes a service provider as well.
A bit like a utility, isn't it?
Absolutely, absolutely. We've seen the same problem with broadband providers, right? They provide access to the internet, but they don't like the fact that they don't benefit from the value-add services that come on top, such as YouTube, such as Spotify.
And you just wonder, Ezechi, how easy the switch will be. Are we going to go compare sites and look for an API provider?
I think you will, right? I think you absolutely will, and I think that's what we're going to start to see. And this is something we do see in these spaces where we've seen massive explosion of services, but very little standardization. Although, as I said, open banking should enforce a level of standardization. But what about the price points? What about the level of information that you provide? How many APIs do you actually have? Do we have to go through multiple API providers to get all the information I need from, say, Lloyd's Bank, right? Yeah. So, I do believe you will start to see marketplaces trading in, access to APIs and making it simpler. So you'll see layer upon layer, where ultimately where we get to is a point where the value add players are able to focus purely on providing a great service, potentially with some level of automatic switching at the back end to ensure that what they're offering is a value add service at a price competitive standpoint.
I mean, the business models are obviously still developing for all these API providers. And I guess the monetization of their offering, there's probably not much standardization out there yet. I wonder how transparent the pricing is. Do you have any experience?
It's hard to say at the moment. I think most service providers are fairly transparent in terms of their pricing, but the devil's in the detail, right? There's a number, I won't name them, but there's a number of organizations, particularly in the CRM space, that's all I'm going to say, which seem very cost effective until you actually start breaching volume limits, data storage limits, API call limits, and all of a sudden your costs go through the roof, right? And I think this is an area where we're going to have to start seeing more transparency.
Right. Okay. No, I agree. And as I said, the commercialization is an area that I'm really only just beginning to touch upon. There was one particular example, which I'm sure you saw, which was this week, was Atom Bank, one of the newly established, perhaps not a neobank, but certainly a new entrant, a challenger, linking up with Plaid to provide effectively SME loans to people who I suppose are not currently customers of Atom, but then being able to go into their source of funds to get the repayments or the fees at least collected out of their existing bank accounts or whatever it may be. So that's one application we're seeing. There are a lot more. I saw one even today. You probably saw some press announcements about people who are using rental deposit lending, which are basically going and getting your account information to create a credit score for you away from your main provider, and then either agreeing or not agreeing to lend you money to provide a rental deposit. So that's a new application, effectively a little micro lender popping up only because they can go and create this credit score from your existing API access.
I mean, those are two fascinating examples that you gave then. The Atom Bank one is very cheeky. I've not actually heard about that one. And it reminds me of the time where, the Wongas of the world were able to put instructions against your bank account and keep attempting to withdraw cash until they were able to claim back all the fees. And the FCA actually banned that particular activity. So I think we will start to see these types of challenges emerging, new models coming out, and it will be a case of, can the FCA keep up? And what will happen? Will it go for more of an exception-based model and only clamp down as and when it sees these challenges, or will they just block everyone until people have passed permissioning? It's actually what we saw with the peer-to-peer space. Right. Now, the lending example you gave is fascinating because this really starts to come into a kind of alternative underwriting approach, right? Where we start to look at different types of transaction histories, for example. And in the US, they really led the way on this market in regards to, can I underwrite you based on your eBay history, right? Do you pay your eBay bills on time, right? And this isn't information that typically appears on your credit score. But what it is very useful for the underbanked, right? Those people who don't have a loan, don't have a credit card, but are active online, right? Either in eBay, either with an eBay, with an Etsy, or any of these other types of services where you might be doing very low-level transactions, but haven't gone out and got a credit card. Now, the thing is with that is that historically the FCA still enforced that you had to do a credit check, right? Because you had to pass the treat your customers fairly test, right? And ensure that any lending that you did was affordable, right? So you had to go through the bureaus. I imagine that is still going to be part of the story. I think what companies will do is they will enhance their data sets with this kind of information, which will allow them to score those who are underbanked when they've done that credit pull from a large bureau and can't get any information on them. So I actually don't think it will necessarily enable those kind of small, fast-moving players to start lending faster, but I do think it will allow the more established players to lend more widely and more inclusively.
Yeah. Okay. So that, as you say, the benefit for the unbanked or the lesser banked may be greater than for those of us who are fortunate enough to have fairly good relationships out there. What do you think about the legality? I mean, we're still fairly embryonic, but it's becoming a global phenomenon. It's not just a UK or a European initiative. I've been reading about a new API provider being created in Saudi Arabia and the United Arab Emirates because they've seen the opportunity and they want to follow. Of course, Saudi Arabia itself is promoting open banking now for the first time. We're seeing it in America. Australia has got some very interesting examples that we could come back to. Where do you think the legal responsibilities are going to fall in this? Because we actually invited the BCS legal group to join us tonight, but unfortunately we don't have an expert who is a lawyer, and I know with the greatest respect that it's probably not your bag, but liability here, as a consumer, I'm a bit nervous, maybe, and that, maybe I might be a bit slower on the uptake because of that. But in the Plaid model, for example, who owns the consent of the account holder? Is it Plaid or is it the bank, or where does that?
That's a very good question, and unfortunately
thought it's come up on the chat.
No, absolutely, it's a great question from Amit, and unfortunately I'm no legal expert, so I can't say anything on this from a legally binding perspective, right? But ultimately, firstly, the consumer owns the consent.
Right.
In all cases, right? The consumer provides it and the consumer can take it away. But as with GDPR, it's that first point of call that you are now responsible, right? And you are now passing it down the chain. But as with GDPR, every member of the chain is equally liable.
Right.
Right. Typically, I imagine this is exactly the same with open banking, right? Now, the big question with that, and this was a question that was asked around GDPR as well, was how will this impact smaller players, newer, younger organizations when it comes to working with larger incumbents? Because as a bank, do I want to be equally liable when it comes to working with a young startup organization, right? So if I provide access to an API and give them my data, I might not even know who they are, right? They've come through an API gateway, right? How much control do I have over that information going out, right? So I think there are some really really key questions that need to be answered. I can't profess to have those answers, I'm afraid, but I do think that's an area that does need to be looked at.
I'm a bit wary from my own personal experience. You know, you're a Microsoft user, you're a PayPal user, and every so often you get a change in their terms and conditions pop up on your screen, and you know that if you don't click on it, you basically lose the service. I mean, there's a danger that we go into that model a bit with open banking. You know, people just go, oh, okay.
Yeah, absolutely. So, I mean, abuse is another thing that we have to be very careful of in all these cases, right? So, ultimately, to my mind, what it comes down to is fundamentally choice, right? By having these systems opened up so that we can have more service providers and give the consumer more choice to switch. And what this really does is drive a move towards open data, right? And it's all about giving the consumer the ability to say, I don't agree with how my information is being used. I don't like the service I'm being given. I want to move to a different service provider who provides a similar, maybe differently priced model, but I want to go to them and I need to bring all my information along with me because that is my information.
Yeah.
Right. And I think as we start to see this driving out through the banking space, we're going to see a greater focus and emphasis on this in other areas, right? Such as social media. One of the things that gives the big giants in the social media space is their walled gardens. And those walled gardens lock your data into their environments and their ecosystems, which is where they gain so much value and so much power, right? So if we can force the banks to open up and to give you your data, why can't we do the same with Facebook and Google and Twitter, right?
Yeah.
Instagram, why can't
No, you're right. I mean, I'm the first one who's always amazed that when I go shopping on Amazon for a large box or something like that, next thing I know, it's popping up on my Facebook account.
Well, yeah, there's a lot of that going on and behind the scenes as well, right?
Yeah, absolutely. So this is the big data message that you know you may think you're being private, but you're not as private as you thought you were. Thinking to the future, I mean, we're talking about who's going to adopt and early adopters, and we're seeing some innovative ideas. We're talking about now 15% growth in API hits month by month. You know, we're talking about a 15% increase. Something like, I think it was, I forget a number, 60 million, 6 billion rather, in the last year, 2020. So, you know, 6 billion API applications rather than, it was 60 million back in 2018. So it's massive growth. Where are we going? How does the future look to you at the moment as an opportunity?
I think the key thing about innovation is you can't predict it, right? So we simply can't. We don't know where it's going to go, but some of the things that are starting to happen are really quite interesting. And there's a great example that I like. There's a company called One Banks, for example. And actually my co-founder at Code Untapped, he's been acting as their technical advisor, Jason Halstead, and he's had a great experience working there. What they're doing is absolutely fascinating. Their focus is on making open banking physical, right? So it's almost like an oxymoron there, right? We're talking about this.
We're getting rid of our branches.
Absolutely. Well, we're talking about this digital tech ability for computers to speak. How do we possibly make that physical, make that real? What does that actually mean? But what they're focused on is the simple the big problem that you've just touched on there, which is that banks want to close their branches because they're expensive to run, and increasingly people are moving into the digital age. But an interesting fact is something like 8% of people can't even open an app on their phone, let alone understand how to utilize a digital bank like a Monzo, for example. Yep. So what One Banks is doing is really interesting. They're building an infrastructure that enables banks to outsource their physical infrastructure to One Banks, right? So what One Banks will do is they'll set up temporary terminals in superstores, in shopping centers, and then different banks will subscribe to those locations, and then they'll give access to their services through the open banking APIs. So as a consumer, I can go to a One Bank's location and I can access all my information, whether it's Barclays, whether it's NatWest, whether it's Santander, directly through their ATMs, through their account, through their tools and their services and their consultants. So in essence, what we're starting to see is there are ways in which the digital can be made physical again through the utilization of open banking, and actually increase usage and increase opportunity and options for consumers. And who would have predicted that that would have been the outcome of open banking, right? So that's just one fascinating example. But where do I really see this? I ultimately see things such as Fintech as a service becoming a real thing. What I want to see is my bank account or my phone, let's not call it a bank account, but my phone being able to keep track of my spending data, understand at the point of sale when I'm looking to buy something, maybe actually you need to borrow some cash to do this, automatically go out there, negotiate a loan on my behalf and put that money out and spend it for me. Or it sees I've got additional cash in my bank account on a month-by-month basis. So it recognizes actually, given what you're trying to do at the moment, I understand you're looking to buy a house. I know that you're saving up for XYZ, maybe a car. Let's put some money into a savings vehicle for you. And we'll keep topping that up on a month-by-month basis. So these are the types of futuristic scenarios that technically are already possible, but I think we'll start to see more of as we go forwards.
Yeah, no, I also saw an example today. There was one in Australia, Barrick, or Basic, I think it's called Basic, with a Q at the end, just to distinguish it. And Basic is actually coming out there trying to solve a problem for banks by using open banking as a tool. So whereas we had a lot of news last year, and indeed in the last month or so, about buy now, pay later, Klarna and the like, and how much the growth that they had had, and the regulator then stepping in and saying, well, I think we need to know what's going on in this space and be monitoring it and have you guys regulated. Well, Basic has come up with an open banking app that allows a bank to add the BNPL, the buy now, pay later information from a customer into their credit scoring profile so that they can see that liability at the same time as they're looking at the overall credit score. Well, that's using open banking to solve a banking problem.
This is really interesting, and I wonder how Klarna will react to that, because obviously
it's just to keep it away, isn't it?
Yeah. Well, I don't want to speak for them, but I know the regulator is absolutely looking at organizations like Klarna, and there's a lot of concern. I know Step Change put out a report recently stating that this is basically a disaster waiting to happen at the moment from the buy now, pay later. And it reminds me of the latter days of Wonga, where there was a huge amount of short-term debt that was racking up significant fees for people who didn't really know what they were doing. Wonga was seen as massively innovative. They were a British unicorn. As soon as this regulator stepped in and started to clamp down, that company started to disappear. Right, it got wiped out fundamentally.
We see this, don't we? We've been there. We've been in this industry a little while, and we've seen this come and go. But open banking seems to be here to stay. And of course, there will be winners and losers. And as an investor, which I know that you have your own venture fund, I believe. Is that correct?
I'm part of a venture fund. Yes, it's not mine. I'm a founding member, and I'm also CTO in residence and the principal.
But I think what we're seeing in the open banking space is rather like what we're seeing in the neo-banking space in a way, is valuations of the fintech companies in that space. Every time they do a funding round, another billion on your price. That, and sometimes when you look at the revenue line or the profitability line, or even the 5-year plan profitability line, the chances of these companies making serious money are actually quite low, and yet their valuations are pretty high. Is that a problem, or is that just the industry finding its way and looking for opportunities? Is there a lot of money chasing a couple of players, or is it are there plenty of players out there that we can diversify?
Well, is it a problem? It depends at which point you invest, firstly.
By getting it could be a good thing. Yeah?
It is definitely the answer to that one. Fintech has been the biggest winner from the investment landscape in the UK in 2020. It's been huge, right? And it's one of the technical areas where the UK absolutely leads the way. Although some of the European cities are starting to take over, not take over, but are definitely catching up. And I know from I think it was a currency perspective, we've seen Brussels has become quite significant, and that was Amsterdam has been quite significant in that space. So look, investment into fintechs, yes, it's exploding. Yes, there's a lot of interest. Yes, it's driving up valuations. And a lot of the financial models don't make sense, right? I'll be absolutely 100% clear on that. If we look at the neobanks, for example, very few of them have had financial models that actually work. If we look at Monzo as a case in point, huge valuations, last couple of rounds have been significant down rounds because A, the quality of their customers, B, their ability to drive revenue. Well, there are a few that have been genuinely able to drive profitable models. Starling is one, Oak North is another, yeah. Plaid is another, really interesting. So I think we'll start to see more focus on models that actually drive revenue because the investors are starting to look at it. However, this is still a nascent space. And that's what's interesting. The potential for global growth is huge, right? Every financial services organization on the planet needs to really be providing access to their services through APIs, right? And the level of innovation that can potentially drive is massive. So everyone's looking for the next Plaid in this space, whatever that looks like. Who is going to be the one that is going to be critical to the infrastructure of the finance services space over the next 10, 20 years? That's what we're looking for.
And what do you think it means for the incumbents? I mean, our big five in the UK, whatever it may be, the large banks, what could be the impact on them? And they're already worried about the payment space. They're worried about the Google Pays and the Alphabet Pays, whatever it may be. The Alibabas of this world. How does open banking fit into that? Is it a threat to the legacy banks? Is it
I think it is. I mean, what people don't realize, I think PayPal was valued more than Goldman Sachs, right? And I think Square was valued more than JP Morgan. Some of these fintechs are already more valuable than what we consider to be, the gold standard of our banking institutions. But they've already been overtaken. You wouldn't think it from looking at them from the, where they're based, the offices that they have, the influence they seem to have. But in terms of pure value drivers, they've already been taken over by a lot of these fintechs. So if they don't move quickly, they're already going to have their lunch taken from them. Someone mentioned account switches in the channel. And, the closing of bank accounts the closing of branches has been a big driver. But another major driver has been access to information. Clearer understanding of what my bank is actually providing for me. And what will start to happen is the money boxes of the world, the money dashboards of the world, as they start to act as intermediate layers and start to disintermediate you from the back-end service of the bank itself, and they start to provide the value-add services in the same way as I don't really care who my broadband provider is, I just want access to broadband. That is what's going to start to happen to the banks. Absolutely, if they don't start to really focus on this.
Yeah, and the revenue streams the banks have been relying on, our idle cash, which of course they then lend out a great profit. Our
Well, it
payment.
used to take, what was it, 5 days to transfer money from one
Yeah.
account to another? You're like, what's it doing for the 5 days? And often this was within the bank. Right? So, well, what's it doing? And they're just earning interest. All of a sudden, I transfer money from my Barclays bank account to my Starling account. It happens instantly, right? And that has been a huge change in terms of moving money around the system and taking advantage of opportunities. So I am unequivocal with this, that the banks need to get on board and need to figure out where they fit in this space. Otherwise, they will be relegated. PayPal, Square, these are young companies, right? And there are new companies being created all the time.
Yeah, and it just really is a learning exercise all the time for people like myself trying to operate in the consulting space where you're selling expertise. Just keeping yourself current is a full-time job. It's a massive effort to make sure that you really do understand the space as it's evolving, and that you have the expertise to go out to your customers and advise them. So it's really important. Ezechi, I think we should probably try and draw our conversation to a close and invite back Chikezi, who hopefully has been monitoring some questions. And we'll just leave a little bit of time at the end here. We've got probably about 9 or 10 minutes. Let's see if there are any Q&A questions that we can answer. There may be a few that we can't. Chikezi, thank you very much indeed.
Yes, thank you. That was quite insightful, and that was an interesting conversation. I'm sure our audience really enjoyed them. Yes, we have a couple of questions from members of our audience. So there's a question here from Stephen, who's our committee member. I think this is for Ezechi. It says, going back to the FinTech survey, Ezechi, who do you think is the target market for open banking services?
So it's an interesting question. It's a really good one. And I think you have two core markets. You have the consumers who utilize the services that access your bank accounts. And then you have the companies that are leveraging things like open banking APIs in order to provide value add services. So the ultimate end client is always going to be the consumer. But I think the real big players, the ones that will win in this space, will be those who are providing the nuts and bolts and the infrastructure to the other players who are providing those value add services. So I do think it will be the likes of the Plaids of this world who are selling their API access to other fintechs, other startups. And let's bear in mind, it's not just fintechs, right? If you've got access to a Plaid, WhatsApp can provide banking services to you, right? Facebook Messenger can. Your website can do it tomorrow, right? If you integrate with these services. So what we're going to start seeing are far more consumer-oriented services providing access to banking services it's just going to be as a standard going forwards. And actually what will start to happen is the idea of the fintech will almost kind of fade into the background. It will be a financially enabled startup that you will be interacting with.
Three more. And we talked about, millennials. One of the key things that BCS is trying to promote is to try and make sure that seniors are trained in technology as well. So trying to make this society inclusive so that nobody gets left behind. And I think, unfortunately, it's the reality that seniors are much more reluctant to share data in this way. And in a way, therefore, the audience for the industry tends to be the younger end of the spectrum.
Absolutely, but also at the same time, seniors still, they go into shops, they go into stores, they use ATMs, they spend on cards, they might use cash. But what you might start to see are more services that can be offered by your local convenience store, right? For example, if through we talked about the one banks model, why can't your local corner shop become your bank if it has access to open banking APIs, right? Why can't it do that? With an iPad, sat on the side, scanner for your card, interact directly with your banking services through a Plaid or through a One Banks. All of a sudden, your local corner store where you've gone in, bought your paper every day becomes your local bank. So when we talk about open banking, this is the type of innovation that affects everybody in our society.
Yeah, no, you're right. I mean, our post office provides some of those services already, of course.
Absolutely.
Yeah. And the banks are very happy to hand over some duties to them, like cash and things like that.
Again, absolutely. As are the stores. Most stores don't want to handle cash, right? Because it puts them at risk. It has to be moved. It's costly, right? But the more you can move to digital, the better. That's why cashback was such a major innovation, actually, by the supermarkets. The reason why they started offering cashback was because it allowed them to empty their registers, right? It wasn't actually for the benefit of the consumer.
No, that's fine. It's quite interesting too that, of course, the government is getting in on this Open Banking Act, because there was this announcement recently that HMRC have given a £3 million contract to an API provider company, a relatively new one. I can't exactly remember the name. It'll probably come back to me. EcoSpend, I think was the name. EcoSpend, and EcoSpend will create an opportunity for HMRC to give you your money back, maybe, or but more likely take it from your bank account. They're going to give you more payment options about how you pay your tax bill.
Now, it would be amazing if HMRC could interact with all. If I could give permission to HMRC for my pensions accounts, my investment accounts, to my payment, for my salary accounts, and have my end of year tax return just done automatically for me without having to hire an accountant, right? Again, these are the types of ways in which open banking suddenly enables these types of services.
Yeah. Wait and see. Chikezi, sorry, any more questions that we should?
Yes, we've got more questions. I will have a question from Mike Green. The question is, will open banking replace FCA-approved screen scraping services entirely, or will screen scrapers remain in some circumstances?
Well, I think the key thing is the FCA has never liked screen scrapers, predominantly because from a GDPR perspective, you have to give access to your username and password, right? So I believe screen scrapers will be eventually outlawed, right? Unless, of course, it can be done in a way that is still secure for the end user.
Okay, thanks. I've got another question from Michael Koff. The question is, isn't closing branches what causes most switches at the moment? Also, not that many switches annually still. Then he puts in question here.
So we touched on that a little bit earlier. You're absolutely right. Closing branches has a massive impact and drives switching. But part of the reason why people haven't switched so far is, well, what's the value to me in doing that, right? And the challenge of doing it is still significant. Don't forget, there's also a level of habit and loyalty that people sense. But as that intermediary layer starts to build up, over time, it'll become easier and easier to switch. There was a while when nobody switched their electricity provider. Now it happens fairly regularly, right? And you're going to start to see that happening. And I think that will be one of the big changes of this. And this is one of the things that the banks are really afraid of, right? And hopefully this will start to drive more innovation within the banking system.
All right, thanks. We've got a question from Adam. His question is, why do you think open banking hasn't allowed personal access to their API instead of having you go through third-party services?
That's an interesting question. Now, think about this. If I were a bank, would I want all 66 million people in the UK trying to set up an API to interact with my banking system? Probably not, right? So, and then if you think about that, what that looks like from a volume perspective, from a security perspective, I just don't think that's likely to happen, right? You're more likely to see, and also to be able to access those systems, you have to be a regulated entity. So that's also a question to the FCA. Would we ever want to see a situation where, as an individual, I can interact directly with my bank account in order to pull data down? I mean, technically, you can do it manually, right? You can log into your bank account. You can download a spreadsheet of your transactions. So why shouldn't I be able to do it? I think it will come eventually. I don't think the banks will offer it themselves. I think it will be the type of thing that you will do through a third party, simply because of the challenges of providing these types of services.
Okay. I have a question from Amit. I think this already been answered in the played model. Who owns the consent of the account holder? played
I think
or
that
the
one's
consumer
still
fintech
up for
played. So I mean,
debate.
I think
I think
yes, it's
we're to the lawyers there.
we have
We'll wait to hear from the lawyers.
we have that's true. We've got a question from G. Donnelly. He says, "Hi Ezechi, I'm working to develop the open banking platform within my organization. In brackets, a non-CMA 9 challenger bank. And one of my biggest hurdles at the moment, other than trying to keep up with the post-Brexit landscape, is the at times competing nature of the many regulations banks are bound to. To find a solution that satisfies or can take longer, especially in smaller banks. Do you think there's still a way to go from a regulator perspective to join up to ensure that ASP, SPS are given the opportunities to provide better solutions for our customers using open banking without the challenges mentioned?" So basically the challenges are, he's talking about regulation and the joining up from a regulator perspective to ensure the ASP are given the opportunities to provide better solutions for his customers, basically.
Okay. So it's a long question. And let me try my best to answer this one. Different organizations competing with different regulatory landscapes. How do we find solutions that satisfy everyone, especially with smaller banks? Is there a way to go for regulators to join up to ensure that everyone's given the same opportunity to provide better solutions? So I think absolutely. Look, any new initiative like this will have hiccups, will have hurdles, you'll find competing standards. It's always the way. The irony of open banking, uppercase O, uppercase B, is that it's supposed to enforce a standard upon all the UK financial institutions. What I think we'll start to see are more sandboxes opening up, such as the FCA's regulatory sandbox, to enable a bit more experimentation, to start to build layers on top of layers. And this is what you tend to see if we think about how the internet's evolved. You know, you have so many different, communication standards, but what starts to happen is, again, layers that sit on top to take that complexity out so that the level with which you interact is at one that's standard to everybody else and easier for you to do. So I think we've got a ways to go before that's going to happen. I think we'll see standards coming up, we'll see standards falling. We'll see some big organizations doing really well. We'll see others really struggling in this space. But over time, the landscape will become homogenized and standardized. I completely believe that.
Okay, we're probably in danger of boring our participants if we wrap it on too long. Chikezi, should we wrap it up, or is that do you have more questions?
No, we still have more questions. We still have about 3 more questions. Okay, so we have a question from Robert. He says, "What do you think the future of cash is if everything can be done via APIs? Would we start to adopt cryptocurrencies and just completely drop cash?"
Oh, this is a big question. Firstly, you don't need cryptocurrency to be cashless as a society, right? You know, you use your cashless card, you never pull out a cash note from an ATM, you're already cashless. You don't need cryptocurrencies to do that. Cryptocurrencies are more about disintermediating authority, right? So who decides on what the currency is, who puts the currency controls around it, who controls access. That's really what cryptocurrencies are focused on. You don't need API systems to drive that. However, APIs that hook into every financial system certainly make it easier for us to incorporate cryptocurrencies within the fiat currency system. One of the biggest challenges for people in the cryptocurrency space has been and will continue to be, well, how do I convert my crypto to fiat? And when I say fiat, I mean sterling, US dollar, euro, right? And that has been a major, major challenge for organizations ever since we started with the crypto space. So that change, I think, will be driven significantly by the shift to APIs. Does it mean we'll adopt fully cashless? I don't know, but we're seeing in countries like India, for example, a big push towards this, right? Simply because it reduces the costs, it reduces the wastage in the system, the printing costs, the distribution costs, paper, ink, water, all of these things suddenly go away. It introduces a whole bunch of other societal, moral, and financial challenges, though, however. So we need to be very clear about that. One of them is around our elderly populations who are very uncomfortable with this idea of not being able to keep money in the drawer where it's safe, right? I've got family in Nigeria who during the Civil War had property confiscated, right? So there is a desire to retain a level of control over our finances as opposed to giving it all over to the banking system or the crypto system, wherever it happens to be. And let's not forget, there are plenty of stories of people with cryptocurrency who've got millions of pounds worth of value hidden in landfill somewhere where they've either thrown away a hard drive or lost the password. So, we've got to be careful about this switch over time.
I mean, I would just like to add something there, because I've always been a little bit of a skeptic here, and even put something in my newsletter recently about Bitcoin when, with Tesla could virtually move the market. It didn't matter.
Let's not get started on this market moving side of things.
But central bank digital currencies, CBDCs, central bank digital currencies, there's not really a great deal of difference between a central bank digital currency and the ledger-based system that we currently operate. Because basically your money, if it's in the banking system, is recorded on an electronic ledger.
Absolutely.
So really, what is the difference if I call it a pound or a central bank digital currency pound? You're still relying on the government backing for it, which is absolutely nebulous, of course, because we all know that there is no backing, there is no gold standard or anything. There's nothing stored away. It's just done on trust. So again, we come back to trust. And if open banking is a tool to increase the trust in the marketplace, then it's quite possible that we may end up with what's then redefined as a central bank digital currency, replacing the existing ledger-based system. I think it's quite separate from any conversations about cryptocurrencies and Bitcoins.
No, absolutely. And I'm sure there are people in the audience right now screaming at us saying, that is not how cryptocurrencies work. That is not how distributed ledger technology works. We know. But we're summarizing and we're simplifying.
Absolutely.
But fundamentally, what we're saying is that the push to APIs certainly precludes a drive to a cashless society, but it doesn't necessarily require crypto for that to happen.
No, I agree. Thanks.
No, that's absolutely correct. Actually, the Bank of England is undergoing a review on digital currencies, as well as the European Union as well. Even the chairman of the Federal Reserve mentioned that yesterday during his testimony. He was saying the US or the Federal Reserve was also interested in building the digital dollar. So like you said, you don't need cryptocurrency to go ahead with the digital side of the currency, what they call it, paradigm, basically. We have another question from a member of our audience. The question is, it says, isn't closing branches? This is from Michael. I think, isn't closing branches what causes more switches?
We've already had that question.
Okay, I think that came up again. Then there's another one from Stephen again. It says, if the traditional banks cannot compete, what will happen to them, given that they actually hold the money?
Well, hopefully that money will get disintermediated into the other companies, right? Because who holds the money is all where it sits on the ledger, right? Fundamentally. So I don't see that as being a challenge. I don't think you're suddenly going to see the banks putting their fingers in their ears and saying, it's my money, sorry, you can't have it. I don't see that happening. What I do see is the banks having to change and potentially add more value add services. I mean, a very simple, surface level change has been access to information, right? If you think about pre-Monzo, how many of your banks gave you information about payment history, gave you decent information about payment patterns and behaviors, and gave you quality information to your transaction history? I know for a fact that with Barclays, for example, there was a time when I could only get 3 months of digital history, right? That was it. Anything beyond that was impossible. all of a sudden now I can see my entire history. Well, where was it before? Oh, okay, you just weren't providing access to it because you didn't want me to. And on the surface level, what you're starting to see is the banks are being forced to adapt. The banks are historic organizations, are embedded into our infrastructure. They have extremely powerful brand awareness. I don't think they're going anywhere. I don't think they're going to suddenly disappear. I do think their role will change over time. I do think there will be more challengers who are able to take them on and provide value-added services. I don't believe the banks are going to disappear, if that's what anyone is saying, anyone is thinking. I just think that we'll start to see greater and greater innovation in this space that will force the banks to be more consumer friendly.
Yeah, no, I mean, banking generally, the point is that they're big players with big pockets. And if they see an idea which is, getting commercial leverage in the marketplace, they simply buy it in. Mm-hmm. And you'll end up with this consolidation process that, where at the moment we have fractured and the shattered ecosystem in fintechs with thousands and thousands of players. I mean, the consolidation that's going to go on there is going to happen very quickly. And part of that consolidation will be banks buying in fintechs and API players and wherever else.
Absolutely.
So I think, the marketplace is still very much at the beginning. And we need to have this session again in a couple of years' time. And hopefully Ezechi will still be available and he can bring his expertise back to the table. You've been really wonderful, Ezechi, tonight. Thank you so much for your expertise. We really enjoyed it.
It's been a pleasure. I've really enjoyed the session.
I'd like to get one plug in while we still have an audience of 45 people to say that I'm also treasurer of the BCS Embrace group, and we've had a very diversified panel on tonight, but we're trying to make BCS more inclusive and trying to get more and more people to join and to get the benefits. So please, when you next look at your membership options in BCS, click on the BCS Embrace group so that you're getting information about our diversity challenge. Please do that for me.
Yeah. Sorry, one last thing. Yeah, we have one last question from, we just have a user that just typed in a question. This is from Uche. It says, does this all drive towards everyone eventually being charged to own their accounts?
Okay, so does this drive eventually everyone towards being charged to own their accounts? One thing I need to say is that the UK is a bit of an outlier in having free bank accounts. Most other countries charge for access to your bank account service. Okay, so we are unusual in that space. That said, I think personally it's less about open banking and more about the neobanks that are driving towards that, because you're starting to see more and more challenger banks coming up that frankly don't have billions of pounds of savings cash to fall back on in order to lend to drive the profitability. So they're having to find newer ways, not newer ways, but other ways to generate revenue in order to stay alive. One of the outliers in this space is obviously Starling, but that's a bank for SMEs, for startups, for companies, and they are now charging a fee for access to a Starling bank account. So I think we'll start to see greater acceptance of paying for bank account services, particularly as the younger generations get used to signing on to a Monzo bank account or a Starling or a N2 or whatever it happens to be, as opposed to a Barclays, and then being told, look, we'll give you all this great stuff, but in return, you need to pay for service. And I think we'll start to see that happening. So I think it will drive greater adoption, which ultimately may well end up with us no longer having free bank accounts. But let's be honest, as I said, we're quite unusual in the UK.
I agree. Okay, so I think we've come to the end of our Q&A session now. Thanks for our audience for participating. Thanks to our guest speaker, Ezechi, for coming, and today to David Lewis for the great interview, and for the Fintech committee members. I hope you've had a great evening, and we'll see you next time.
Thank you very much.
It's been a pleasure. Thank you, David, for the fantastic interview and the great questions, and Chikezi for running a brilliant session.
We will do the pizza and red wine at some future.
Yes. We can all go out for a beer, we'll do it.
I look forward to that. Thank you very much for your time.
Fantastic. Okay, thank you. Bye-bye.
Thank you.